There's so much bad advice out there on LLCs, and there's a lot of myths that need to be debunked. In today's video, I'm going to be doing that, but also giving you the real strategies and advice you need to know on how to properly use LLCs to minimize taxes and protect your assets. I'm Matt Sorensen. Let's build wealth. All right, now the biggest myth out there is that LLCs save taxes. No, they don't. LLCs do not save taxes. If I just set up an LLC with the state, what happens from a tax standpoint is I am taxed as a sole proprietorship. If I have a partner in the LLC, I'm taxed as a partnership entity. What happens and what tax benefits do I get from an LLC is if I didn't even set anything up at all. Let's say I just said, I'm going to just operate and start my business. I'm going to be just Matt Sorensen, sole proprietorship. What difference is that between an LLC? Zero difference. There is zero difference between being a sole proprietor or an LLC. In other words, the LLC does not save taxes in and of itself. S election to the LLC or doing an S corporation, because for those of you that have a business selling goods or services, when you make money, you pay something called self-employment tax. And an S corporation can save you on self-employment tax. Let me just give you an example. Let's say you were a sole proprietor, or you just did an LLC, your tax as a sole proprietor, you make $100,000 a year. Do you know how much self-employment tax you need to pay on that? 15.3%. $15,300 is going to Medicare and Social Security before you pay federal income tax or state income tax. That's a lot of tax. But if I had an S selection on that LLC, I can do what's called a salary-dividend split, pay myself a salary of $40,000 and take out profit of $60,000. Now, why would I do that? Because there's an awesome tax strategy that says you only pay self-employment tax in an S corp on the salary, which must be a reasonable salary, but you pay zero self-employment tax on the profit or dividend out of an S corporation. So if I had $60,000 coming to me in net profit or dividend, I'm not paying self-employment tax on that. I'm saving 15.3% on $60,000, which amounts to a $9,000 a year tax saving in that example. A sole proprietorship, I'm going to pay 15.3% on $100,000. An S corporation, I'm only paying 15.3% on the salary, which is the $40,000 there, which is going to be $6,000. But the $60,000 of net profit I took out, zero self-employment tax. That's how I'm saving. And that is where an LLC taxed as an S corp will save you taxes. Now, the next myth out there that's screwing up a lot of people and costing them expenses and costs they don't need to incur is this advice that you should set up your LLC in Nevada or Delaware or even Wyoming. A real lawyer is going to tell you for a small business, medium-sized business, rental property, you should be setting up your LLC in the state you conduct business. If you're selling goods or services, that's where you are or where your business is located. And for you real estate investors, you're doing business in the state where the property is located, and that's where your LLC should be set up. Now, let's say you did an LLC in Delaware and you have a rental property in Pennsylvania. Well, Pennsylvania is going to say, I don't care about this Delaware LLC. We don't even recognize it unless you register it into Pennsylvania. So why would I go to that expense of doing a Delaware LLC and then paying all over again to the state of Pennsylvania to register the LLC? It makes zero sense. So our advice there is always, let's just set up the LLC in the state where the property is located. Let's cut to the chase, keep it clean and simple, and you're still going to get the asset protection where if anything happens on that property, the tenant is forced to sue the LLC. They can't sue you personally. So let's go to the business example. Let's say you're selling goods or services. I'm here in Arizona. A lot of Californians fall into this trap here that people will pitch and say, hey, just set up your LLC in Nevada. If you set up your LLC in Nevada, they have no corporate tax, no income tax, run your income through Nevada, and you won't even have to pay income tax in your state. Wrong. The state of California, the state of Arizona that have a state income tax don't care what state you set up the LLC in. They care about the state that you conduct business in or reside in. So if I live in Arizona and do business in Arizona and have a Nevada LLC, Arizona's still going to make me pay state income tax where I made the money and where I reside. So I'm still going to have to pay into Arizona. This idea that I can set up an LLC and get out of state income tax is total BS. Don't fall for that trick. Make sure you're setting up the LLC or corporation in the state you're conducting business. All right, now the last myth out here has got people setting up LLCs they don't even freaking need. I hear people go to a conference like, I got to set up an LLC for my car so that if I'm driving it around for business and I get in an accident, they can't sue me and come after my assets. I need an LLC for my house. I need an LLC for everything. And they just went to this conference and set up like 100 LLCs and they have zero business and maybe one rental property. Stop it with the overkill of LLCs. Let's be a little more cautious about when we set up an LLC. Now, if you got a side hustle, main hustle business, let's get an LLC going. I like that. We want a legitimate business entity. We want asset protection if something's going to happen on the business. If I got a rental property, sure, I want an LLC for that, but I may not need an LLC for every property. For you real estate investors, these are the ones I see that sometimes have too many LLCs. Let's say that you have 3 properties, and let's say that each of those properties has $50,000 of equity in it. Well, you could just put those 3 properties properties into one LLC. Now I get the liability protection if something happens in the LLC, one of the tenants in those properties or their guest has a problem, they slip and fall, whatever it is, they're forced to sue the LLC. They can't go after me, they can't get into my home or my other retirement accounts or business or other LLCs. All my other assets are protected. The liability is contained in the LLC itself. Now I do have 2 other properties in there and that equity is at risk. So the downside of putting multiple properties into one LLC is you can't have all of your eggs in one basket. Now some people say that means you need an LLC for every property. Maybe, but I want to look at how much equity do I have in each property, or how much equity combined is in the LLC. Our rule of thumb is once you have $250,000 of equity or more in an LLC between multiple properties, we like to set them up and put them in separate LLCs. But we don't think the cost of an extra LLC is worth it until you've got $200,000 to $250,000 of equity between multiple properties. So for example, let's say that I own 2 properties that each had $500,000 of equity in them. Well, I'm going to put those each in a separate LLC. I don't need $1 million of equity at risk between 2 properties. I'd rather isolate those so if something happened on property number 1, they could only sue LLC number 1. They can't get over LLC 2 and property 2 and all of that equity. So I'm able to limit that liability to that specific entity. But on the other hand, you could have 10 properties with $10,000 of equity between each property for a total of $100,000. And I'm going to say, let's just put those all in one LLC. No creditor is going to chase down to try and get $10,000 of equity out of each property. They can't come after you personally and get to your other assets. So in that scenario, I'm like, let's just use one LLC. So the key here is not how many properties do you have, but how much equity do you have between the multiple properties? And that will determine how many LLCs you need. Now, the final point I want to say on that is if you have rental real estate or other investment assets that you're using LLCs for, I want to make sure those are separate from your business operations. Okay, I don't want an operational business where you're dealing with customers and services and providers and all these other things. I don't want those liabilities to be able to be affecting your assets. So we want to keep LLCs separate that are doing business and operations versus holding assets. Now, LLCs are a very powerful tool. Successful entrepreneurs, investors, business owners use them. I have like 15 of them myself, and my law firm is advising clients about how to set these up every day across the country. Now, for more tips on how to protect your assets, save on taxes, grow and build wealth, please subscribe to my channel. I'm Matt Sorensen. We'll see you next time.